How to invest money in your 20s so you can thrive in your 30s. That's the topic for today's episode. And without further ado, let's dive in. Hello everyone, and welcome back to another episode. For those who are tuning in for the first time, this is your channel for real estate education. So today's video was created for those who like planning long-term, especially if you're young. So today I have 5 different tips that's gonna help you start investing your money and slowly roll it up like a snowball effect, right? To create money long-term. So let's just dive into the board. So first things first, I'm gonna use a very interesting analogy that's going to change your perception towards money, right? So let's assume we have here an iPhone, right? The popular cool phone, right? And one of the things that always interests me the most, let me just make it look a little cooler, right? Just assume this is an iPhone. And one of the things that I always thought was very interesting are college students, right? When you're in college, at least my perception of it is that you typically don't have any money, right? You're partially receiving money from your parents, partially receiving money from financial aid, and then a couple of side jobs here and then that you're taking to cover your daily expenses and also your tuition expenses. And for some reason, I always see them with the latest technology, with the coolest technology. And one example of that, it's an iPhone, right? So I recently looked it up. The latest iPhone, I think is the 11 Pro or something like that. That phone can range somewhere between, I believe it's like 700 and something to 1,000, right? So 700 and change if you have a trade-in phone, and then 1,000. So what I want you to do is sort of like start thinking, okay, instead of getting an iPhone, which is very cool, maybe you can do a lot of things with it, maybe you can answer emails, but do you have a current functional phone that can help you get to where you need to get to, right? And the answer is yes. Milk that phone, that old phone, for as long as you can. Why? Because with the $1,000, and I'm assuming that in this case scenario, you're not trading anything in, you just want a brand new phone, you have $1,000 to invest. So there are multiple ways where you can start small, investing your money, and then bring it all the way up to the next level. So we're gonna list those here, and then we're gonna go into my computer and take a look at each and one of the ways that you can actually invest money in your 20s, and then we're gonna come back out into this board right here. So one of the very first way, and I'm gonna list them from the least expensive to the most expensive way to invest your money. So one of the very first ways to do that is through a platform called Stockpile. So Stockpile, it's a platform that allows you to buy fractional stocks. So let's say, for example, you saw a stock like Apple right here, right? And Apple, let's say it's a little too much for you to make the most out of your $1,000. So what you do is that you buy a fraction of it, and then you slowly continue to buy more as time progresses. So that way you can make the most out of your money. Then the next platform that I wanted to share with you, it's a platform that is called Robinhood. And I'm sure a lot of you had already heard about that at some point in your life, but Robinhood, it's a, stock trading platform, ETF, you name it. And then what you do is that you can buy full stocks and you buy them without having to pay any commissions. Most platforms, the majority of platforms out there, they tend to charge you for it. Although I know that the competition is actually coming up to speed and they're trying to compete against Robinhood by waiving the trading fees. But if you're a brand new investor and you're trying to get yourself acclimated with everything that's going on, I think Robinhood is definitely a great platform for you to start investing your money. And then the next one that I have in mind for you, it's a platform called WeFunder. So for those who don't know about WeFunder, I'm about to show you very soon inside my computer. But WeFunder is basically a crowdfunding site, right? So we have companies, we have startups that go into that one-stop shop website, and then they pitch their product, whether it's a service, whether it is a product, and then you have the option to invest in that company before they go public. So what happens, let's say you saw, I don't know, a company that is pitching you the latest technological product out there, and you really like what they had to offer, you think it's going to be a great value add to society, and you decide to invest a certain amount of money. So what happens when that company grows and eventually go public, you're going to get priority to get access to shares in that company before it even goes out to the public. So you don't have to go out and start competing with, you know, the open market. Like, you are receiving priority at this point in time. Then the next platform that I want you to look into, it's one that is called Fundraiser. So Fundraiser is, I'm not entirely sure what to call them, whether they are ETFs and stuff. I'll definitely, you know, double check once we're inside my computer. But in essence, what Fundraiser does is that they buy a chunk of portfolios. They go in and they buy lots and lots of property. And what they do is that they pitch it to investors and they receive money. It's sort of similar to WeFunder, but this is heavily focused on real estate. So they have high rises, they have apartment complex, you name it. And what you do is that you invest a certain amount of money. They have a minimum, of course, and then each quarter what they do is that they pay out dividends for you, and then the money that you invested, it gradually continues to grow. So these are the 4 platforms. I know I have one more tip for you, but before we even get to that point, what we're going to do, we're going to go inside my computer, and then I'm going to show you how to navigate through each of these 4 platforms, and then I'll see you guys back outside. And we're now inside of my computer, and I have all 4 tabs open for each and one of the platforms. Now, bear in mind that for Stockpile and for Robinhood, you can actually download an application and you can start trading from the comfort of your phone. So either way is fine. So let's just quickly navigate through this website. So now we have Stockpile. What exactly is Stockpile? And like I mentioned before, it is a way for you to trade on fractional stocks, right? So as you can see here, it shows you that you can start investing with just as little as $5, and you buy fractions of over 1,000 stocks and ETF, and it's free to sign up, and you don't have to keep up with any monthly fees or minimum. So there's a video that you can watch here at your own time, at your own convenience. I'm pretty sure it's a demo video, and here are all of the endorsements, right, from Consumer Reports, CNBC, Wall Street Journal, and Forbes. And as you start scrolling down, then you can see a little bit of everything, right? So they kind of like walk you through the perks of having an account with Stockpile. And like I said, this is not for everybody, but I am making this video for informational purposes and to be able to cater to everyone out there who's in their 20s, and that, you know, you might have a limited budget to invest in, but you at the same time, you don't want to miss out, you want to get started. But for those who have more money to invest, we're going to explore all these other platforms, and ideally you could do, if possible, a combination of all 4. But if you can, then you can start, you know, testing the waters with Stockpile, and then as you start accumulating money with interest and company gains, then you can, you know, decide whether you want to transition into something that will require more capital of you, or if you want to continue just in this site, right? So fractional shares, instead of buying an entire share, just invest in any amount you want. You also have the possibility to give stocks to other people. Then you can learn as you go, and then kids and teens can track their stock 24/7 and place trades that you approve. So for those who are actually parents out there, and again, this video is not just designed for people in their 20s, but if you are a parent and you want to start getting your kids into the habit of investing, whether they are, you know, teenagers or whether they're in their early 20s, this is certainly a great video that you can share with them and to give them options, right? So as you can see, shares like Amazon, shares like Alibaba, these are expensive shares. I know last time I checked, we are in March in 2020. So Alibaba was 185 a couple of days ago. Amazon, I think at this point, it's over 1,000. Let me just quickly check. So let me see, finance, yahoo.com. And let's just quickly look at the number and see how much is Amazon nowadays. So now Amazon is 1,785. So let's say, for example, you want to get started into the investing, but you're in your early 20s. It's very difficult for you to come up with this much money just to buy one single stock. Ideally, you will want to have the flexibility to diversify your stock portfolio, and you definitely don't want to put all your eggs in one basket. So for that, you can diversify them by buying fractional shares here in Stockpile. So it's definitely a great way to go, and how it works, and just you can read this at your own discretion. You just sign up and then you start investing. And as you can see, they have a screenshot right here where they actually show you how you can choose the amount that you want to invest. Or let's say, for example, for a stock in Google or an Alphabet, you can, just choose to allocate $30. For Microsoft, you can choose to allocate 75, and then Coca-Cola 20. So you actually call the shots. Here is a screenshot sample of Amazon, and as you can see, Amazon is trading at 1,785, but you can easily allocate $100 for it, and eventually it's going to grow over time. So definitely check it out. Here's the account protection, and what are the benefits of it. So feel free to venture out and just simply check out the site to see if this is a good fit for you. Now, for those who have managed to save more money and you're ready to venture out into buying whole stocks, right? There's a platform that's called Robinhood, right? And as you can see here, Robinhood is more than just for stocks and funds. You can do options. You can even trade crypto. So for those who are interested, you can definitely do that. And one of the things that make Robinhood so popular, as I mentioned earlier, is the fact that when they first came out, it was very appealing to millennials because it was the only platform at the time that was not charging any fees. And so they started gaining a lot of market share. And over time, their competitors, they had no option but to sort of like get on board with the no trading fee practice. So other platforms like Charles Schwab, for example, are currently allowing their customers to trade without paying for any fees. So it's definitely worth for you to check it out, right? It's time to do money. Robinhood, a pioneer of commission-free investing, gives you more ways to make your money work harder. So you can feel free to sign up. It's free to sign up and break free from commission fees, right? You can make unlimited tradings and you don't have to worry about any commissions. It turns out that I'm realizing that now they're also doing fractional shares. This was something that I was unaware of, but hey, things change all the time. I haven't been staying on top of my stock portfolio. As you guys know, this is a real estate investing channel, and that's where most of my attention is going towards. But again, even though this is a real estate investing channel, it's important to diversify, right? A couple of weeks ago, I launched the video where I talked about why the rich gets richer, and Robert Kiyosaki talks about the importance of diversifying your portfolio. One way is to diversify with a business that offers you cash flow, then with real estate, then with stocks, and then lastly with commodities, right? Anything that's related to gold or oil. So this is a great way for you to do that, and it has a low entry barrier because when you are in your early years of investing, chances are your budget is somewhat limited, but that's not to say that you cannot invest, right? So let's just make the best out of what you have, make the best out of your budget, and then just, build a snowball effect after that and just scale it as you move along. So there you go. So you have access to pretty much everything. They do a pretty good job explaining what you can do in here. And the beauty of this is that, you can actually learn a little bit about money, buzzwordy. So they have a good platform that can teach you and get you educated on the subject of investing. They have multiple terms that you can actually start getting familiarized with, like, for example, what's arbitrage, what's an internal rate of return. This is something that was not available in Robinhood when I started using the platform. So you guys are coming in at a good time because Robinhood is definitely, stepping up the game in spite of the latest bluebird that they've been having with their platform. But again, it's just things happen. But the important thing is that they're actually doing the very best to keep up with market demand and market standard. Now that you know about Robinhood and Stockpile, we're going to move on to WeFunder. And this is the page that I mentioned that allows you to actually invest in multiple startups and companies. So as you can see, there are a few down here. So here you have a company that focuses on spirit, another one that focuses on AI, artificial intelligence. And if any of these don't resonate with you, you are more than welcome to come up here and start exploring, right? So you can explore depending on the type of category that you want. So whether you want to invest in a little bit of everything, or business that are heavily focused in technology, or Main Street, alcohol, hardware, software, entertainment, retail. So let's see, I'm curious to see what's on Main Street, right? So you have the distillery here, you have whiteboarding tools that foster collaboration, you have desk cleaning tablets, save money, plastic, and the earth. So this one actually has a purpose. They are cleaning, but at the same time, they are saving the planet, right? So let's say you believe in their mission, their concept. They are a disruptive brand that is changing the household cleaner industry, and they have a team of seasoned professionals driven to build a successful non-concessionary impact company. So let's say you're curious about this one. Let's just click in here and learn about what they need. So they have a total of 446 investors. So far, they've managed to get a little over $500,000, and you have a minimum of 100. And as you can see, each company is different. Some companies require a minimum of 100, some require a minimum of 5. The ones that I originally invested in a few years ago, they require a minimum of 5, and the other one require a minimum of 200. So you can definitely check this out, read through with it, and be part of one of the very first who actually helped fund a company. So you have another one that is called Side Hustle app, and this is the buy, sell, refer marketplace. And today, Side Hustle app has 266 downloads, which prove market viability, right? So let's say you're curious about this app looks different. So the public launch for this app is on March 27 at 9 a.m. So we have 11 days to go, and the minimum to invest is 500. And you can kind of like see the gist of it. It's definitely something that is worth for you to check. Hey, $100, that seems like a doable number for the other company. Even 500 seems to be a very doable number. And if you're enjoying this video so far, do not forget to hit the like button right now so you can help this channel rank and help other people who are looking to educate themselves in this type of subject. So moving along. Now, the next round, for those who want to really dive into real estate, we have a Fundrise right here. So what exactly is Fundrise, right? So the service. Finally, a real alternative to investing in the stock market. You are investing in real estate, you're investing in a portfolio without getting your hands dirty. So for those who either want to invest in real estate, but they don't have the capital to do so, this is one way for you to do it. Or you can be one of those people who have the capital to start investing in real estate, but perhaps you don't have the time, or maybe you don't have the energy to deal with tenants or property manager or inspections or anything to that matter. So this is kind of like a sophisticated way for you to invest in real estate from the comfort of your home and from the comfort of your computer. So invest in private market real estate, the piece of your portfolio you didn't even know was missing. 30% of your assets are allocated to private market real estate. For years, individuals have been limited to investing in public stocks and bonds. Now, for the first time ever, you can invest like $1 billion institution by diversifying into private market real estate investments, right? So feel free to definitely look into this. This is actually a great site. It provides you with a lot of market research information. It helps you understand. And every time your portfolio acquires a new project, they send you a report. They send you the logistics, the numbers, and everything you need to know so you can stay on top of everything that you are doing. So here are the type of investments. I know I briefly talked about it outside in the board, right? Like I said, you require a minimum of 500 to enter this. So the premium is a little higher in comparison to WeFunder and Robinhood and especially Stockpile, but you're getting your hands on real estate, right? And then depending on where you are, then you can choose from the different plans that you want to invest in. So for example, if what you're looking for is the equivalent of getting cash flow, then you will go with the supplemental income, because what it's doing is that they're giving you access to cash on an ongoing basis, because it's what your goal is. But if you want something that is balanced, let's say you're willing to sacrifice a little bit of the cash flow, but then at the same time you're looking for appreciation, then this is the balanced investing route, and this is the route that you should go for. But if you're doing pretty comfortably, you are working, you enjoy what you do, you're the type of person who cannot just sit still because you love, absolutely love working, then you can go ahead and aim for the long-term growth. Now, with the long-term growth, it's kind of unpredictable, right? You have to ride the ups and downs just like you do with the real estate market or the stock market. Think of it as buy and hold, right? So every here and there, the market, it's going to have to face some dips. So on the short term, there's a possibility that you may lose some money, but as long as you're holding your portfolio for a long time, then you can see the gains overall. And then you can see here in the legend, you will get a few in dividend, but you're definitely aiming for appreciation right here. And if you want to find out more, you can actually open up the tab and you can read the details about it. So it walks you through more in detail as to what is it that you need to know, right? So the key takeaway here, for example, is that this is the type of portfolio for those who aim to earn returns via appreciation. They want to invest in a growth-oriented real estate private equity strategy, and they have target locations, right? And then it shows you a number of active projects, how much of it in terms of percentage is allocated to debt, how much of it you have in equity. And like I said, they show you the details of every project that you do. So for example, by opening this up, we now see that one of the investments, it's in Sandtown Vista Apartments in Atlanta, Georgia. And then the commitment is $5 million and is structured via debt. And the annual return, it's 11.5. And then if you want to know more about the details, then you can expand this so you can get access to more and more. And Fundrise rating A, B, C, I'll leave it up to your discretion for you to learn a little bit more about that. And then here you have access to the full market analysis as to how they arrived to that conclusion that this was an investment that was worth pursuing. So definitely a lot of information that is done for you. They have already done the market research, so you can save yourself some time from having to actively seek that, because all of it has been prepackaged for you already, and all you have to do is just to simply choose which one is the right fit for you. And that's all I have to show you on my computer, and I will see you back outside. And okay, so we're back now outside. You already navigated through that website and you've seen everything there is to see from each platform. So now back into this table right here, or this blackboard right here. And if you're liking what you see so far, make sure you hit the like button right here so you can help this channel grow and have this video ranking so that other people looking for this kind of information can also get access to it. So let's say back into what we have here. So we have 4 different platforms and you have $1,000. So let's take a look at, the time that you can make this work. So let's assume you started doing this in your 20s, right? So you're 20 years old and you have exactly $1,000. So from this $1,000, you can easily distribute this into these 4 different categories. So let's say you have 1,000, you're not entirely sure how you want to do this, so you can start investing, let's say, I don't know, $200 right here. And then you're probably doing an additional 200 right here, right? And then you have now $400. And for WeFunder and Fundrise, their minimum, like I mentioned before, is typically about $500, depending on the type of company that you're investing in here. For WeFunder and Fundrise, it is a $500 minimum guarantee. So what you do is that out of that 1,000, you're going to allocate 500 in each and one of these. So let's say, for example, your focus is more on real estate. So you're going to take Fundrise and you're going to allocate $500 right here, right? So you have now invested successfully $900. Now, you might be wondering, okay, how can I turn $900 into something so big, right? Very easy. So I'm sure you guys all work part-time jobs. Some of you even work multiple full-time jobs like I did when I was back in college. And so what I did at the time is that out of all the money that I made, I will allocate a certain percentage just for investments, right? So let's say, for example, I'm just throwing a number out there. So let's say I made $2,000, right? Because I did had 3 jobs. I actually had 2 full-time jobs and I had a part-time job, and I still went to school. Don't ask me how I did it, but I managed to get through with it. So let's say $2,000 per month you're making, and after taxes and everything, so let's say you're in a 30% tax bracket, and again, I'm just simply rounding out the numbers. So that means at the end, you're left with $1,400, right? So you have $1,400, and then out of that $1,400, you are allocating a 20%, right? So 20% of that is exactly $280. So every single month, you're allocating $280 on an ongoing basis for your small investment portfolio. So imagine taking 280 and multiply that by 12. So we have 280, 10 months, that means 2,800 plus 560, right? So we're gonna end up with $3,360. So every single year, you're gonna invest $3,360 into your investment portfolio. So you're gonna do this for the first, let's say, 5 years of your life. So when you take 3,360 and you multiply this by 5 years, guess how much you're putting away in all those 5 years? You're actually investing $16,800. So this is the amount of money that you're actually putting away and investing in your portfolio. And imagine the amount of money you can actually end up with thanks to compounding interest, right? And if you don't know what compounding interest means, it just basically means interest adding up on top of one another rather than just simple interest. Now that we already gotten this, so we know that within the first 5 years of your investment, that will put you exactly at 25 years old. So you are at 25 years old, you have made definitely more than $16,800 because you have 5 years for interest to accumulate over time. And then with this, what you're gonna do is that you're gonna apply a technique called house hacking. And if you don't know what house hacking is, I'm about to tell you right now. And in the meantime, when I'm deleting this board to make up some new space, make sure you hit the like button if you haven't done so already. Or you can actually go ahead and subscribe to this channel as well. So now we have some white space now. And tip number 5 is what I call house hacking. And you're gonna apply this when you're about to be, or right around, age 25, right? So you found a beautiful house right here. And let's assume this house, it's either a 2-family or maybe it's one of those houses that had 4 bedroom, right? And you found this at an awesome price of $200,000. It doesn't have to be a house. It could be an apartment, because I understand that prices do differ depending on which state you live in or whether you live in a city and a suburban area. But let's just stick to $200,000 for simplicity's sake. And that this property has 4 bedrooms, right? I'm just throwing a number out there. So $200,000, 4 bedroom. And let's say because it's your first time, is your very first property that you're buying, that you can actually put 5% as a down payment rather than the usual 20%, right? You qualify for an FHA loan and stuff like that. And then all you need to put down for this property, assuming you have excellent credit, right, is only $10,000 at age 25. $10,000, and you have already put away $16,800 in your stock investments or in any of the investments that I talked about previously between the age of 20 to 25. Imagine the amount that you can accumulate. And this is just the amount of money that you're putting away. And remember, I'm not even adding interest. So back here, so you put $10,000 down. And what happens for most people when they live in their 20s, right? They have roommates. I have plenty of roommates because it's a way for you to share your living expenses, is a way for you to share money, maybe pay off some of your student loans, plenty of things, right? So imagine you bought this house or maybe this apartment again, and you have 4-bedroom, 2-bedroom. I mean, it doesn't have to be a 4-bedroom apartment or a 4-bedroom house, as long as you can put a roommate or 2 or perhaps even 3 in it. And what you're gonna do is that you are all gonna live in the same place, but then you're gonna rent out the rest of the bedrooms, right? So assuming you do get a house with 4 bedrooms, then you live in 1, right? And then the remaining 3, let's assume you're renting it out. Let's say your house is really cool and you're charging, I don't know, I'm just throwing a number out there. Again, it all depends on your market conditions. It all depends on the area that you live in. But let's assume you're renting each room for $500 a month, right? Just a simple number. And that means that at the end of each month, you are already collecting $1,500 that's gonna go straight towards the mortgage payment of your brand new house. And then you pay for the difference. Look at it as if you're actually paying rent yourself, right? And boom, that's it, right? At 25, you're buying your very first property. You're applying the house hacking technique by sharing it with your friends, with roommates, whatever. So assuming you do this for another 5 years and you pay down your mortgage aggressively by leveraging the money for your roommate or your, quote unquote room tenants and paying a lot out of your own pocket, you have accumulated sufficient equity down the road. And then what you'll do, you can either do a HELOC or you can do a cash out refi. And for those who don't know what that means, it's at a high level, a way for you to do a refinance in your property and then just take cash out of it so you can utilize that cash and continue to expand your real estate portfolio. But for further details, for those who are very curious, I'm gonna leave a link down here below so you can actually check out those concepts, and hopefully it will help you in the planning so you can live a thriving and financially independent future in your 30s. So that's it. That's all I have for you today. Hopefully you find the content valuable. And while you are still here, here is one of the videos that I was talking about in terms of HELOC or cash out refi. So make sure you check it out because it will definitely help you complement whatever you learned in this video today. So that's it. I will see you soon and take care. Bye-bye.